Assalamualaikum warahmatullahi wabarakatuh. As for today, my group will be discussed on the article review on the market of financial report audit, regulation of and competition for auditors independent.
Assalamualaikum and a very good morning to Prof and friends. I'm Muhammad Zakwan from Group 2 will present on the reviews of the article The Market for Financial Report Audit Regulation of and Competition for Auditor Independence. As for the introduction, the overview, recent evidence given to Australian HIH Royal Commission. It described a lengthy and questionable trail of errors may affect to the judgment to financial management and audit of HIH Insurance Limited. According to HIH Royal Commission in 2003, it brings little comfort to the auditing profession in Australia. Since the collapse of HIH, it is seen as the break-even point to start for conventional financial report auditing in Australia. Similar to the end of Texas-based energy trading company, Enron relates to the past event that gives biggest impact to the auditing profession in the United States as well as the economy. According to this article, after Enron collapse may refer to the composition of the once great global accounting firm Arthur Andersen. Other changes shows widespread concern and even worrisome related to the quality of report accounting numbers so as the independent of auditors. This may refer to which it has bring to the proposal to increase regulatory powers, increase in responsibilities as well as facing a lot of challenge. According to this paper, it discusses more on the challenges, of how auditing independence to be implemented, why the way in which the auditing profession regulators operationalize and control independence requires serious consideration. According to the past events, all are related to independence in Australia where to be analysed. It includes comparisons are also made with the United States Sarbanes-Oxley Act 2002 reform and relevant empirical academic research. Moving on to the audit function. Auditor opinion is an informative and together with the financial report, is being used as a clues in detail about the company's value shown to the public and other companies in many jurisdictions that required by an act of parliament or other regulatory requirement in Australia. Audit gives a value by lower information risk. The risk refer as being a risk that the information disclosed to the market about the corporation underlying economy aspect but need to disclose together with the financial statement for and on behalf of the management and also board aligned with Australian standards within the performance and position of the company that need to be presented. According to the video just now, there are two types of independence, which may refers to one state of mind that permits the provision of an opinion without being affected by influences. Okay, two, independence in appearance. It refers to the avoidance of act of facts and circumstances that are reasonable and informed third party having knowledge of all relevant information. As you can see, these are the continuation from the previous slide. This is the example of some potential threats to independence include the recent debate that is in the article. In Australia, the regulator is Australian Securities Investment Commissions, ASIC, the disciplinary body, the company's auditors and also liquidators disciplinary board, CALDB. Two major professional accounting bodies, which is CPA Australia and also the Institute of Chartered Accountants in Australia, ICAA. They have to play role through administration of their joint code of professional conduct, which is harmonized with the International Federation of Accountants, IFSC. According to this article, audit as a technical expertise and professional judgment, in addition, independent to the management and board that made the original representation is to highlight on both statement, financial position issues and also other transaction within a company. It is a value to the company by adding up audit because it defines or it explains more in detail for the representation. Last but not least, the clear demarcation of duties and responsibilities between management and auditor is muddied in practice because the disclosures released in the financial report are the conclusion of a set negotiation and compromises between management and auditor. With that, thank you.
Assalamualaikum. My name is Nurin Sharina and I will proceed on to present on auditor independence. For the auditor independence, the audit they will add their value when the information risk is lower. So what can we tell about the risk is lower, which is when the audit of the accounts they lower the risk by they give more surety to the market, and then the quality of the information itself uh, is high, and also it result for the higher share price. So this is good for the market price for the investor. And then next is an audited account an audited company. They tend to have a higher share price in stock exchange to be compared with the non-audited company. And then number three, there are variability of quality in audit independence. It can take in different forms and resulted the quality level of audits. So for the variability of quality, they come in different forms, such as the regional expertise, the industry specific knowledge, and then they have an excellent audit technologies, highly capable staff, and also the quality also they can come in the form of the premium fee level, which is it depends on the knowledge of the auditors. Next is the audit quality. They consist of two components, which is competence and also independence. For the competence, such as they develop the industry expertise, they use the advanced audit technologies, and they also compete in respect of the price itself. However, for the independence, there is still no evidence or a little evidence that existed that the audit firms they compete in respect of the independence itself. However, these two components they are not necessarily sufficient condition uh, to be audited as the value. Next is poor audit quality, audit failure that is discovered well after the fact is happened. So the quality of the audit they're difficult to be observed by other than by those who are most involved. So those who are usually involved, which is a financial reporting function within the auditee, and then the audit committee of the board of directors. And then next is there have been presumption from the board of directors that the audit committees and shareholder that the audit firm they are independent that related with matter of trust. So what we say of the matter of trust is there is the interest from the shareholder that when the trust is misplayed or being is breached, so the skeptical on the quality of audit is being questioned. So the consequence is the value of the audit itself will be depleted. And then next is the audit firms they routinely and legitimately complain that they were perceived to be responsible for the company failure. However, the company failure usually they do not happen because of the poor audit itself, but they are most likely because of the company lack of competence. The company is lack of competence and also ineffective of the management team. And the last one is the audit firms they are routinely being sued or threatened with litigation is because of the circumstances that the audit quality is rigorously tested.
Assalamualaikum. I'm Diana and I will be discussing about the regulating independence of auditing. There is suggestion to have the optimal method of dealing with the current controversy in auditing by develop more rigorous and substantial regulatory or legislative regulations governing the audit for market services. But there are three challenges to control the auditor independence, which are the efficiency, effectiveness, and completeness. I will be discussing on more detail of this challenge in the next slide. First, we will be discussing about the efficiency in regulation for timeliness. The regulation of auditor independence is costly and inefficient as it is much better to avoiding the threats to independence than dealing with the compromised independence. An external oversight board will only learn about the independence threat when there is measurable economical damage, thus it is neither assist the efficiency of the market nor enhance value for auditor or auditee. Characteristic of independence threat which are subtle and not easily measured make it less susceptible to exactly accurate observation for regulatory oversight and intervention. Next will be about the definition and delineation of the threat of the effectiveness in regulation. Observable potential threat identified are the joint supply of audit and auditor provide non-audit service. Auditors provide non-audit service occur when auditor review their own work. Auditor provide non-audit service is so lucrative that it develops into fee-dependent threat. In United States of America, the Sarbanes-Oxley Act limiting and precluding certain type of auditor provide non-audit service fee. It also limit the provision of non-profitable services. As for Australia, Corporate Law Economic Reform Program Act 2004, or commonly called as Club 9, proposed to categorize the type of an auditor provide non-audit service. In Australia also, it is needed to disclose the amount of non-audit services purchased from the auditor. Lastly, is about the emerging threat as for the completeness in regulation. The independence threat keep changing and there are also new threats emerge. It is based on 10 years ago when the joint supply and auditor provide non-audit service is not considered as independence threat. Right now, many threats are not identified easily and most likely legislation comprehensive is decreased. If the auditor independence is enforced via legal or regulated means, various group of stakeholders conclude that the problem is fixed and the complete solution and problem will not be noticed until the next corporate failure. That is all for the regulating independence of auditing part. Next part will be continued by my group mate Amira.
So I will continue with the supplying audit and non-audit services. So normally audit firm will know that they will provide audit services, but in certain case they also provide other than audit services. In this case, this can create independence issue. So the suggestion is for preclusion of joint supply audit services and non-audit services, as this is to limit the threat to independence by the auditor. So below are the examples of non-audit services that cannot be jointly provided with the audit services as per Serban Oxley. So to cater this issue, under Club 9 proposed that a comprehensive disclosure rules in relation to APNAS to include not just the dollar amount but also its nature. Second is the requirement for the audit committee state in the financial report that the provision of APNAS in relation with the compatible with independence. However, there is opinion saying that AMNAS benefits the firm and the audit client in a way that it brings efficiency and effectiveness. It's because the auditor already understands its client's operation via the appointment as the auditor. So this will help them to spend less time in regards of the non-audit services, for example, like consulting services and etc. But there is the disadvantages of APNAS can't be denied. From the view of the auditor, it can affect the audit process when the auditor knows something about the company through non-audit services provided, and they might not highlight the issue in their opinion due to the auditor still wants to keep a good relationship with the client, uh, or to serve the client's favor. So the suggestion is to appoint different person to do the non-audit services. Next is from the view of the client. Of course, they will appoint the auditor that they feel comfortable to liaise with to the extent for non-audit services. So independence issue of the auditor will arise here and people will question the audit quality of the audit report. So market will see the information in the audit report is high risk of information. So this will directly affect the share price of the company and the value of the company as well. So the potential effect of preclusion of joint supply are: first, accounting firms may withdraw from the market for audit services and allow others with reputation of audit quality to be in the market. Second is the availability of expertise will be reduced due to the move to other area of industry.
Next, I will continue with the rotation of the audit firm. The rotation of audit firm in Australia, they applied the audit partner rotation, and then usually this requirement they specify partner rotation every 5 to 7 years, and then the cooling off period usually is minimum is 2 or 3 years and maximum is do not exceed 7 years. So this regulatory action has potential to have negative consequences for audit quality and damage position of the shareholders. Uh, actually at one point that Australian regulators, which is AASIC, they also argued that potential of solution to auditor independence. They had suggest to mandated rotation of the audit firm, which is a mandatory rotation of audit firm. The CLEP 9 CLERP, they proposed a mandatory 5 years period, and then for the ICA and CPAA 2001, they recommend for 7 years. So they have for the potential of negative consequences, they have several points to be support, which is 5 years rotation patterns that would ensure lower quality audit, and to retain industry expertise and specialization will become problematic, which is it comes for 20 to 40% of the percentage. And then the smaller firms, they will be intractable or hard to apply for the regulatory. And then next is the outcome of the rotation. Some audit firm, they will accept the engagement, but they will only do a minimal adequate job in order to maximize their profitability, because they had no prospect of renewal. For the alternative strategy, audit firm, they accept the engagement, and then they spend 5 years building a close relationship with auditing management uh, as to sell non-audit services into the future. So the auditor rotation, they does not necessarily bring the good outcomes to have an enhance the audit independence. It will cause more damage than goods. For the case of firm rotation, it is better to develop in a proper systematic way, or else it's just abandon it because it will affect the firm's constant expenditure entirely. So the mandatory firm rotation, there will cause uh, several things, which is it will incur the rotation cost, and then they will include affect the lack of knowledge of the client when they have a mandatory rotation, and then they will have a lack of strong evidence or positive effect on the audit quality itself, lack of investment in a new audit technology, and so on.
Is communicating through the audit opinion. We know that audit opinion is where the auditor will express the fair view opinion of a company financial statement of its client. But in the audit opinion, it is largely uninformative about many of the process and underlying judgment and decision that comprises the final product. Okay, especially the matters regarding the representation of competency and independence of the auditor. So the purpose is to extend the content of the audit opinion on the issue of competencies and the level of independence of the auditor. By doing this, this will help those who seek to rely on the audit opinion with the information of the competencies of the auditor, and the absence of the competencies information let the market relies on the market reputation of the auditor. In the other word is they will depends on the brand names of the audit firm.
Now let's move on the competing for audit quality. In the current situation, perceived quality actually linked to the brand name. As the brand name tarnish, the market are likely to punish the audit firm without evidence that the quality and independence of auditor is compromised. So, in order to cope with this problem, in Australia, they implement two model, which is independence board model and expert internal review model. So, this model is on the publicly disclosed quality control process. Okay, this model actually implemented in order to make audit firm compete to have better auditors independent. So the auditors independent can be a new measure for quality, same as the competency and expertise. Okay, let's move on the first model that I mentioned earlier, which is the independent support model. So this model actually suggests to create auditors independent board in every major audit firm. Okay, the board consists of individual, not from current or former partners or employee in the similar organization. The individual must be expertise in several fields, such as auditing, commercial law, professional services, and accounting, and etc. Okay, the function of this board is actually they can find or trace track to independence in the audit firm in real time, and then to determine whether to proceed or not with the audit engagement after considering the threat of independence. After considering threat of independence, board will be determine certain control or procedure to maintain certain level or threshold of independence. The board also must be expertise in auditing and operation of audit firm, so they can provide the best control and advice toward the audit firm. As for this first model, uh, I can trace three benefit by implementing the model. Firstly is the independent issue, threat and potential threat can be dealt swiftly and rapidly. The board also can deal with commercially sensitive issue without those issue becoming public, and the quality control process of the board can be observed by market. So audit firm now will compete for having good quality control procedure, not just for competence and the price. Okay, the second model that I mentioned before is on the expert external review model. So unlike the independence board model, this model focus more on the review and evaluate independence quality process in audit firm. The reviewer will document the finding and next report publicly whatever the finding. Stakeholder can observe the quality control process of the audit firm. So actually it's quite more torturous compared to the first model, because whatever finding they found in the audit firm, they will publicly report those findings. As for the conclusion, okay, after the collapse of the giant corporate companies such as Enron and HIS Insurance, there is a massive changes in auditing, and those changes more focus on auditors independent. Actually, good audit will add value on the validity of financial statement and other representation of the client's firm. Okay, major issue arise, which is threat to independent is hard to measure. So it lead to late detection of any misconduct and failure, and those failure detected after the damage were done. So to improve this, independence measure need to be considered as a competitive factor, same as competency measure and fee measure. Audit firm need to consider independence measure in order to stay competitive in market, not only consider the competency and fee. Okay, the two model implemented in Australia describe way to enhance independence of auditors. Okay, just now we already discussed on the auditing environment in Australia. So let's now move on the auditing environment in Malaysia. So we would like to discuss three information on how regulatory bodies in Malaysia make their actions to enhance the audit quality and audit independence. Okay, as for AOB, as we all know, AOB plays the role to foster high quality independent auditing to promote confidence in the quality and reliability of financial statement. So, which mean the registered firm and auditors under AOB will be subjected to the inspection. AOB also have power for enforcement, sanction, revocation and suspension of registration, and withdrawal and suspension of recognition of audit firm. Example, AOB conduct a inspection in audit firm, then they will produce an inspection report regarding the deficiencies identified during the engagement. And next, audit firm required to submit their remedies plan or their ways to improve the audit engagement for AOB's approval. Finally, AOB will continue monitoring and the implementation of the plan by audit firm for improvement. So AOB show their effort, show their action on how to they can improve the auditor's quality and auditor's independent by making the inspection, their sanction, the withdrawal, and okay, that's all for AOB. And for MIA, what I can see is they conduct a practice review program by sending MIA officers and reviewer to inspect the selected audit firm in various areas such as compliance, ethic, and practice. And finally, they will provide rating based on the quality of the compliance in the audit firm. So actually MIA quite do a good job on the practice review program, because it is not only can improve the compliance in the audit firm, but also they can suggest ways to enhance the auditor's independent and other matters relating to the audit. And and also MICPA also joint venture with the MIA to provide the audit guide for practitioner AGP to assist small medium practice. The training are held by MIA and MICPA. They combine together and provide practice to the practitioner to show them how to maintain the auditor's independence in doing the audit engagement, and the how to make ensure that every audit engagement will conduct by comply with the rules and regulation, comply with the ISA, comply with the MIA's bylaw, and so on.